everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada, and I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. And today's topic is about deducting remote work expenses. As some of you know, the government has been allowing us to deduct the home office expenses for the last 2 years without providing many proof, but they're taking that privilege away in 2023, and starting in 2023, we are now required to get a special form issued by the employer before you are eligible to deduct that expense. And I get a lot of questions from a lot of our clients, and I recently also did a presentation specifically on this topic to a large corporation's employee. So I figure it would be a great idea to share with everyone how to deduct the remote work expenses properly. But before I get started, make sure you give us a thumbs up if you like our video, and make sure you hit the subscribe button to stay on top of the latest tax tip. Now with that, let's get started. As some of you would have known, a couple of years ago, we have something called COVID, and this thing requires us to work from home. So CLA, instead of forcing the employer to issue this form called T2200, Declaration of Employment Condition, this is the name of the form, Declaration of Employment Condition. Instead of having the employer issue every single employee a T2200 form, CLA came out and said, hey, Canadians, we'll make it easy for you. We'll let you claim $2 a day for every single day that you work from home, up to a maximum of $400. In 2020. Now in 2021 and 2022, when COVID was still around, they increased that number to $2 per day for up to $500 maximum that you would be eligible to claim in 2021-2022 without the issuance of the T2200 form. That privilege is going away altogether, and now CLA requires the employer to issue the T2200 form. Like, what is that T2200 form? Now, what that form does is essentially the employer's declaration of you working from home. Without that form, there is no proof that you are working from home to earn employment income, and therefore none of the expenses that you incur from working from home would be eligible for a deduction. So you need that magical form issued by your employer, T2200, Declaration of Employment Condition. You need that particular form in order to allow you to deduct the expenses you incur at home for the purpose of earning your employment income. When are you eligible to be deduct home office expenses? Well, first of all, there needs to be an agreement between you and the employer that you are required to work from home. This is an important factor. There needs to be an agreement, either in the verbal format or in the written format, that require you to work from home. That is the agreement, the first condition. The second condition is that CLA in 2024, recently in February, they came out with an announcement and a clarification of their policy. If you are the one that's choosing to work from home most of the time, then that means it's not, like in our eyes, in regular English translation, you're not really required to work from home by your employer. If your employer is giving you the option to work from home, and if you do choose to work from home more than 50% of the time, so it does require, and there is an additional requirement, you have to work from home more than 50% of the time. If you meet those conditions, then you would be eligible to claim home office expense. Plus, you need that T2200 form. So now your employer is required to essentially issue the T2200 form to allow you to claim the home office expenses. Now, in terms of that 50% definition, you need to be working from home 50% or more of the time in order to be eligible to deduct the home office expenses. Now, what is 50% of the time? Let's say you work 5 days a week, and you are required to go into the office 2 days a week, and the other 3 days of the week you work from home, then you would be eligible, that would be 60% of the time, and then you would be eligible to claim home office expenses as a deduction. With respect to the T2200 form, as you can see here, your employer needs to issue this T2200 form for you. Your employer would need to fill out section 6 of this form that specifically asks these questions. Did you require the employee to use a part of their home for work? And your employer obviously has to say yes. Now, and then if yes, about what percentage of the employee's duties employment were performed at their home office. Now, this has to be right. If you, in my example earlier on, the person that we were talking about, 2 days working from the office, 3 days working from home, this would have been 60%. And if your employer had never reimbursed any of the expenses that you incur from working from home, then the answer to this question, did you or will you reimburse the employee for any of their workspace in the home office expenses, would have been no. And if it says no, then that pretty much allow you to claim all your eligible expenses. And we will get into what kind of expenses that you're eligible to claim. Now, if your employer did reimburse you for a portion of the workspace in the home expenses, they would have to say yes here. And then they would have to specify the amount that has been reimbursed and the type of expenses that have been reimbursed. And they would also have to specify whether the amount is included as part of the T4 or not. If it is part of the T4, nothing further you need to be done because that is part of your employment income. Now, if it is not part of your T4 though, let's say you receive $1,000 to pay for your work from home expenses. That $1,000, if it is not part of your T4 slip, you have to deduct the expenses. You have to offset the reimbursement that you get from the amount of home office expenses that you are deducting. Let's say you have a $4,000 of home office expenses in total that you're deducting, and you receive a reimbursement of $1,000 from your employer, and that $1,000 reimbursement is not part of your T4 already, not part of it, then you are required to deduct your home office expense of $4,000 net of the $1,000 reimbursement. That's not part of your T4, and the only amount of deduction that you're going to get is $3,000 because you can't double dip. If you are already claiming the expenses and getting a reimbursement, you have to net off the extra expenses. You have to net it against each other. Only the extra expenses that you're not getting reimbursed would be tax deductible. Now, for those cases where the employer already include the reimbursement as part of your T4, then you do not need to net it against the expenses because the amount is already part of your T4. You already include it as part of your income. And so it's very important to clarify with your employer if you're receiving anything and if it is part of your T4. Let's move on, talk about the type of expenses that you would be eligible to deduct. Now, it goes back to whether you're a salary employee or a commission-based employee. Now, if you're a salary employee, you are eligible to deduct utilities, rent, maintenance and minor repairs. You're also eligible to deduct home internet expenses. You may also be eligible to deduct office supplies, paper, ink, notebook, etc. Now, what you're not eligible to deduct is the mortgage interest. Property taxes, home insurance, they're not eligible to deduct at all. You are also not eligible to deduct any capitalized expenses. For example, upgrading a furnace, that's not part of your regular deductible expenses. The improvement to the house, you're not eligible to deduct the improvement, the upgrade that you're doing to your whole house as an expense. So going with the same definition, capital expenditure are not eligible for deduction. This also means monitors, new chairs, new desks that you are buying, they're also considered capitalized expenses, and therefore you're not eligible to deduct those as well. Now, the way that as a salary employee would deduct their expenses, they will go to the form T777 T777 employment expenses on their personal tax return, on their T1. This T777 employment expenses form is part of your T1. And you will go there and start deducting the expense. For salary employees, in my example, let's say this employee has a house of 1,000 square feet and there is a designated area of about 100 square feet, a bedroom that's dedicated for home office space. So 10%, essentially a prorated expenses, 10%, 100 divided by 1,000 square feet of all the expenses that this employee incur would be tax deductible, assuming that he works from home more than 50% of the time, assuming that he has a verbal agreement or written agreement with the employer, assuming that he also has the T2200 form written and issued by the employer for him to deduct the expenses. So in that case, 10% of the electricity, heat, water, home internet access fee. In my example, this person has incurred $4,000 for the full year. 10% of that $4,000 would be tax deductible. 10% of the maintenance expenses would be tax deductible. As I mentioned before, home insurance and property taxes are not tax deductible for salary employees, so this person would not be able to deduct it. And this person would also be able to deduct a portion of his home internet expenses as well. So at the end of the day, this person incurs $6,900 in total for home office expenses based on the allowable deduction. And then only 10% is related to the home office based on the size, 100 square feet out of 1,000 square feet in total. So only 10% of the $6,900 will be tax deductible. So assuming this person is making $100,000, then they can get a tax deduction, a write-off of $690. So $100,000 minus $690 would be taxable. And therefore you get a tax deduction of this $690. Now let's move on. If you're a commission-based employee, essentially you are still eligible to deduct everything that's deductible under as a salary employee. You would still be eligible to deduct utilities, rent, maintenance and repairs, home internet expenses, office supplies, paper, ink, notebook, etc. But you are also eligible to deduct home insurance, property taxes, and if you incur any cost to lease your cell phone, computer, laptop to earn commissions income, they're all tax deductible as well. Now, similar to the salary-based employee, you would not be eligible to deduct the mortgage interest, which seemingly is the largest expense as part of maintaining your home. Unfortunately, you're not eligible to deduct mortgage interest at all. You are also not eligible to deduct any capital improvement of the property. Like I mentioned before, upgrading a furnace, upgrading your roof, monitor chairs, new desks that are generally considered capitalized expenditure, they're not tax deductible. Now, so for commission-based employees, they would also go to the same form, T77 employment expenses form, but instead of being restricted to deduct only electricity, maintenance, and home internet expenses, these commission-based employees would be eligible to deduct home insurance and property taxes. So this person would have incurred the $2,000 for home insurance, $4,500 for property tax, and together with all the other expenses, total $13,400. 10% of which is related to the dedicated home office space, and therefore 10% of the total expenses, $1,340, is tax deductible against the employment expenses. So this is how you come up with the amount of tax deductions that you would be eligible to get. As you can see, some of these numbers could be substantially bigger depending on the size of your home office space in relation to the size of your home you're living in. It could be substantially bigger than the $400 and $500 that was allowed by CRA. What kind of documentation do you need to support your deduction? The first thing first is to prove that your home office size is really what it is, and also your home size, the whole house size. And so therefore you do need to keep a copy of your floor plan. And you would also need to be able to mark the area that you use designated for as your designated home office space. So you need to be able to prove to CRA that you have that particular dedicated space and the size of your house as well. Now, it's also important to mention that you don't need to submit the floor plan to CRA. You just need to keep it while you still have the detail and the information, because sometimes life circumstances change. You move from one place to another. 2-3 years down the road, when CRA come knock on your door and ask for documentation, you would not be able to provide it if you don't have the document and you don't really remember the size of the space and how to justify your claim of the percentage that you're using in terms of claiming your home office expense. They always ask for a floor plan, so make sure that you do the documentation. Now, another question that I get all the time is that, hey, Cherry, I use the entire basement as my home office space. Well, you have to be somewhat reasonable. If you're operating an office space, you're not using your basement as a showroom, you're not really using your entire basement as your home office. So you cannot deduct 1/3 of your house as an expense. You have to be somewhat reasonable. Now, I did have a client who was using their basement, her basement, the entire floor of basement as showroom, and she showed all the SKUs of products that she was selling, then that makes sense to deduct that. And you need to be able to show CRA that is what you're doing. So pictures would be preferred if you are really in those extreme situations. And then in terms of the documentation, you really need on top of the floor plan, you would also need to keep the receipts for your utilities, your maintenance receipts, your internet bill, your property tax bill, if your insurance bills, and any other expenses deductions that you have. It's important to keep all these documentation together with your T2200 form, as well as your floor plan. This will form the basis to help you to document what you're claiming on your T777 form. If you happen to be the one that's living in a condo and you're really using your kitchen table as your home office space and you're working out from your kitchen table, how do you come up with the deduction? Well, as a matter of fact, CRA actually gives us some guidance if you are sharing that space with your personal use. So essentially, what you would need to do is to document the hours that you're using your kitchen island as your home office space, and essentially only claiming that portion of it. Like, let's say 8 hours a day that you're using that kitchen table for your home office. So 1/3, essentially 1/3 of the expenses. And then you also need to prorate the number of hours available and all that. Less than 1/3 of that kitchen space is eligible for deduction. So it gets a little bit crazier when it comes down to hours of use, but that's what you're supposed to do if you don't have a dedicated office space and you're sharing that use of the kitchen table together with your meals, as well as your other use or weekend party hosting use. You have to split that between business use or employment use versus personal use, and it would be split based on essentially the hours. Now, you are also eligible to deduct some of the expenses that happen exclusively in your home office space. Like, for example, if you paint the place, your home office space, that would be generally considered repairs, and that would be 100% deductible. You do not need to prorate it. You just claim the expense, provided that you have T2200 and 50% over and all that stuff that I mentioned earlier. You would also be able to claim like replacing a light bulb, because that's considered repair expenses. It's not considered capitalized expenses. Maybe repairs to your computers, that would also be considered a repairs expense, not a capitalized expense. So those would be 100% deductible. Now, that's basically the gist of how to claim your remote work expenses. If you find our video useful, make sure that you give us a thumbs up. If you haven't already subscribed to our channel, make sure you give us make sure you hit the subscription button below so then you can stay on the latest tax tips. Until next time, happy Canadian real estate investing!